Hello, good day. Welcome back. Trust you're doing wonderful. Alright, so today we'll be looking at risk management practicals. It's important that pay attention to risk management because risk management is always the guarantee of our success in trading. Because in a game of probabilities, you need to be very, very careful with how you place your bet. You get the point? Yes, so risk management is our guarantee of longevity in trading, and it's important that we pay good attention to it. Alright, so in this section, we'll be looking at risk management practicals. Alright, so in our previous session, if you know, trading is all about buying and selling, and not just buying and selling, but buying to take advantage of the appreciating assets, and at the same time selling, taking advantage of declining price assets. So after figuring that out in technical analysis and you have your good trade setup, the next thing to look out for or to be very specific about is your risk management. Alright, so risk management is all about position sizing. Get the point? Yes, risk management is all about position size. So when we come to talk about the different types of position sizing, we talk about how we manipulate our lot size in such a way that we are only risking a specific amount of our account size. You know, we can have different account equities, maybe a $10K account, a $1K account, a $100 account, and as well, a $100K account. And in each of these accounts, they can be expressed in percentage, 1%, 10%, 50%, as the case may be. And as much a 100K account size, it's not the same as a 10K account, but then it can be expressed in percentage. Is what I mean. A 100K account, 1% of a 100K account is $1. Yeah. Then 1% of a 10K account, okay, sorry, of a 1K account is $10. So let's say we are considering a $1K account. So we want to risk a specific risk amount, which is 1% of that trading account. So that means we'll be risking $10 per each trade setup. And as well, if we are considering the same risk management plan, fixed amount 1% for the same $100, that will be $1 risk for each particular trade. Alright, so let's go into the practical. So so first of all define our risks. We define our risks either as a fixed amount of your account total account equity or a percentage of your account balance, which it is normally good to go with percentage of your account balance. So the next step is position sizing. Very important, position sizing, manipulating your lot size. So the goal is to determine the right lot size to risk a specific amount per trade while keeping your risk percentage constant. Keeping your risk percentage constant regardless of account size. Yeah. To achieve proper risk management, we rely on two essential tools. Two essential tools. Right, and these tools can be gotten from the trading view. So the first one is the long or short position tool. Right? Yes. So in our trading view, known as TV, under tools we have the major tools, like not major but major measurement tools. Under the measurement tools we have the long and the short position tool. So when we are buying, we are going long, we are buying a particular asset, we are using the long tool to measure our trade setup, and as well when we are selling, we are using the short position tool to measure our trade setup. So the next order tool to use is a risk calculator, a position size risk calculator. All right, so the long short tool from TradingView. So these are the characteristics of this long or short tool. Like I said, it's available on TradingView, helps visualize trade setups by including key elements such as first, pay attention to this now, first entry price. So either you are using the long tool, you are buying the market or you are selling the market, you will always see an entry price. So first, an entry price, the price at which you enter the trade. That is either the ask or the bid price. Either you're buying or you're selling, the ask or the bid price. You get here. So that is the entry price. Then the stop loss price. The stop loss price. And the stop loss price is expressed in pips. You know what is pips? Price increase in point. How do you measure the increment of price? You measure it in pips. Move from one point to another. You say, okay, this is a 10 pip movement. So this stop loss is measured in pips. You get the point here. So let's assume we have a 20 pip stop loss on Euro USD. What does that mean? That means that we have a 20 pips point that if price should move to that point, we accept that we are wrong on the position. You get the point? Yeah. So the stop loss, the take profit in pips, and then very importantly, the risk to reward ratio. So what is the risk to reward ratio? Your risk is your SL, that is your stop loss, where you are okay allowing the trade, where you are okay letting the trade to go. We are allowing that, okay, I'm wrong in this particular position. So that is your stop loss. And your stop loss, we are talking about risk management now. Your stop loss is finite. You measure your stop loss, like you say, first of all, you choose what you want to risk. Is it a percentage of the account, or is it a percentage, or is it an amount, fixed amount in your account, as the case may be. So they take profit in pips as well. So the take profit is the reward. When you are risking 20 pips, you are risking 20 pips to make, let's say, 60 pips. That is 1:3 risk to reward. So what is risk to reward? Simply put, risk to reward is the amount you risk to make a certain amount. So if I'm risking $1 to make $2, that is what now? That is 1:2. If I'm risking $1 to make $3, that is 1:3. $1 to make $5, that is 1:5, right? Yeah, so risk to reward, your risk to your reward. So we can simply put, you divide your TP by your SL, you get your risk to reward. So if your SL is 20 pips, if your trade setup, if you want to get a 3% return of what you are risking, you divide your TP by your SL. Anyway, I hope you understood that. All right, so yeah, is the ratio comparing potential profit to the risk. Yeah, the ratio, you get the point, is a ratio comparing the potential profit to risk. Yeah, so by using this tool, traders can quickly analyze and adjust their setups before execution. Take note. Yeah, before executing your trade, you need to deploy all of these measures to see that you get your appropriate position size to maintain good and proper risk management. All right, so the second tool is the risk calculator. What is the risk calculator? It helps determine the appropriate lot size. This is what we are talking about now. The appropriate lot size for a trade based on your stop loss distance and account risk percentage. All right, so let's consider an example. So the example one, we are examining this trade setup, Euro USD. So now the asset is Euro USD. It's a currency pair, a major pair. Everybody know Euro USD. So considering Euro USD, so this now is our trading view. It's a section of the trading view right here, and this is our short position, right? Because it is selling. Short position is selling. Right. All right. So considering this example, we have the following conditions. We have stop loss 17 pips. You come, you see stop is in percentage of whatever account has been set in trading view. Trading view will keep this percentage, whatever percentage has been set in trading view, right? Right, but you can forget about this one. Just pay attention to this one now. So you are seeing this is your pips, your SL in pips. So this is 17 pips. Stop loss 17 pips. All right. So stop loss 17 pips. So what again? Your risk per trade. Remember, we say you determine your risk amount and then you use your trading view, your short position or your long position in your trading view, and then your risk calculator. So first, our stop loss is 17 pips. You note it, 17 pips. What is our risk per trade? We are risking 1% of our account balance, right? Yes, we are risking 1% of our account balance. Okay, so the take profit is 80 pips. This one is normally not important for risk management. You get the point? Yes, it's normally not important for risk management because this one is your profit. When you're talking risk, you are just talking about managing your losses, and then profit is not included. So as you know, risk to reward 4.7. Right, this is effective in building a trading system. Okay, so now we are concerned about just this. The risk amount is 1% and then the stop loss is 17%. So having gotten these parameters, then using the risk calculator tool, we can calculate the exact lot size to match our risk plan, ensuring consistent and controlled risk exposure across all trades. So you can use this respectively in assessing these tools. All right, so the first one we have, there are a lot more position size calculators everywhere. We have some as apps, we have some as sites, there are so many more, and there will still be so many more. Yeah. So now I just consider this to my FS book and baby pigs. So let's just say we are using baby pigs for this calculation. So using baby pips now, I'll just simply come to baby pips. Okay, let me refresh this. Okay, so let's assume an account size. So which account size are we assuming? Okay, let's just say for the purpose of this class, let's assume a $1,000 account size. So what is our risk? What are we risking? We are risking 1% of this account. So 1% of this account of a $1,000 account is $10. So that one is just for you to know that in this trade you are risking $10. Okay, so now we come back to our position size calculator. First, our account currency is USD, yes. So account balance, so we quickly put 1,000. Yeah, 1,000 account balance equity. Risk percentage, 1%. That is 1% of this account. You want to risk $10, right? Yeah. Then stop loss. What was the stop loss amount? It was 17 pips. So we'll just quickly put 17. Right. Then what is the currency pair? Euro USD. Yeah. So what will I do? I'll just come and click calculate. Yes, calculate. And then boom, you have amount at risk. So this is what we are risking, $10. If this trade should go wrong, we are risking just $10 of our trading account size. And this is why we say Forex is not that risky. Gone are those days you are just trading without stop loss because there was nothing like stop loss. But now, thanks to innovation and thanks to progressive growth, we have stop loss. Our brokers helps us with stop loss and take profit order. So this is $10 risk. So but what are we interested in all of this rubbish now? I'm just interested in the lot size. So coming here now, you see this. So be careful now. We have three types of lot size. We have the standard lot, the mini lot, and the micro lot. So looking at this is the micro lot because it has 0.0. So 0. If this was a whole, if this was a a round number, would have called this a mini lot. If it were just maybe 1 point something, 2 point something, would have called it a standard lot. But this now 0.058. This is a micro lot, and it's the lowest lot size we can use because we are not trading a cent account. Yes, it's the lowest lot size we can use. So considering this, how can you put it in such a way that you'll be risking $10? Because from what you have here, you can't input 0.0588. No, you cannot input this in when you want to execute your trade, maybe your MT5, March trader, seed trader, or whatever. So how are you going to manipulate this now? Right? Okay, so you pay attention to this now. So 17 pips, if you use 0.05, maybe you might be risking $9. Okay, let's just say use 0.05. You can use 0.05, so you'll be risking $9, right? Yeah, you risk 0.05, you'll be risking maybe 8 point something dollars, or maybe $9, because this is 0.01. Because 8, 0.08 is maybe the same thing as maybe, okay, 0.008. Approximately it is almost a kind of micro lot, right? So we just say, what are we going to do? If this is our setup, right? Okay, this is our setup. So maybe you can just manipulate the entry price a little bit, but then you can just be fine with this. You can just use 0.05, so that instead of risking $10, you're risking maybe 8 point something dollars or $9. Is cool. So you just copy 0.05, and what and that is your lot size for this particular trade. So now when you go to your MT5 app, either you're using a limit order, instant execution, buy stop or whatever. But in this trade now, this was a limit order trade. So now I'll go to my MT5, tap on Euro USD, new order, go to pending order, sell limit, and I'll quickly put my activation price. And then what I am important, we are talking about risk management. What I am very concerned about is the lot size. I'll input 0.05, put my SL, put my entry, activate it, and when I'm done, I go and do something else and come back for the result, because this is a kind of intraday setup. So that means in a day there'll be three things that's going to happen. Either market will just ignore this setup, that is, there will be no activation. That is one. Either you will just come and see -$8 in your account, or either, because this is a 4.7 arrow, either you see maybe $8 times 4.7 profits. That is like 20 something dollars. So that is risk management. Hope you gain value from this. All right, so this is the first example, so we'll end with the second example. So the second example, we have a trade setup on GPPJPY, right? Yeah, GPPJPY. Pay attention to this now. So now these are the parameters. The stop loss is 120 pips. JPY, JPY has is wide. It is very volatile. Let me put it that way. So you can see this pip, but there in Euro USD was just 17 pips. Okay, so now looking at this is our stop loss. This is what we are concerned about. Yes, this is what we are concerned about. So coming here now, what are we going to change? Account side the same, 1% risk. So stop loss now is what we are going to change. What are we going to put? We are going to put 120, right? Okay, 120. So putting 120, what again are we going to put? We are going to change this now to what? To GPP JPY. GPP JPY. Right? Yeah. So GPP JPY. Okay. GPP JPY. Okay. Alright, so this is GPP JPY. So now this is very important. Pay attention to this. They're asking you for the current USD JPY ask price. Get the point? Current USD JPY ask price. Alright, so let's go back. So we have this. So now using this baby calculator this time. Okay. So for GBP JPY, the position size calculation resulted in a standard lot of this. Since JPY is a cold currency, the tool required the USD ask price. Alright, pay attention now. To convert the pip value into USD, This ensures accurate risk management when trading cross currency pairs. This is not USD, it's not Euro USD, it is not the normal USD. When you are trading with USD as the code, it becomes easier because you just come here and you just choose that trading asset and boom, you just calculate. But now all every other currency that is not based on euro, that is not based on US dollar, you'll be required to provide the ask price of the code currency. Alright, so from this now, note, okay, the reason why my FX book position size calculator asks for the USD JPY ask price when calculating for GBP JPY but not for Euro USD is due to how position sizing works for cross currency pairs that do not include USD as the code currency. I just explained this. Why this happen? Euro USD, the pip value is already in USD. That is the pip value is already in this USD relatively. Yeah. So because USD is the code, USD is the code. It's just like you are dividing this by this. How many of these can give you this? So USD is the code currency. No extra conversion is needed, right? Extra conversion is needed. But GBP JPY, since JPY is the code currency, this is what is the code currency now, not USD. The pip value is in JPY, right? Not USD. To express risks in USD, the tool needs the USD JPY ask price to convert USD to convert JPY to USD. So key take, whenever your account currency is USD and you are trading a pair where USD is not the code currency, the tool needs an additional exchange rate like USD JPY to properly calculate the risk. Most time you'll be asked for the code price of USD, okay, of CHF. Yes, most time you'll be asked for CHF. Most time you'll be asked for, yeah, for CHF. So to properly calculate the risks in your account currency and vice versa for other currencies as well. Yeah, so take note of this. So you copy the ask price for USD JPY. So from this calculation, okay, this was a 10K account. So the ask price as of then was 191,926. So when you copy that, you 191,926, you just insert it here. 191 191,926, 191.926. So what are we going to do? Just hit calculate. So now this is the lot we will be using for this trade, 0.01. Wow, so you can see that JPY is very volatile. Imagine we're using 0.01 to risk $10, right? Yeah, so we can see this trade. So for this account, it gave us 0.15, because this was a $10,000 account. So this is how you manipulate your position size. This is how you manage your risks, and it's important that you pay attention to this, because before entering your trade, after doing your trade checklist, checking your trade setup, your confluences, all your confluences have been made, what you need to pay attention before entering your trade is manage your risks. Please, I beg you guys, if you want to stay long in this game, you need to know how to manage your risks, right? Yeah, so maybe in subsequent course we'll be talking more about risk management. Risk management is it's a lifetime practice. So it is, let me just say, it's living, right? Okay, so I hope you found value from this. So let me just recap again. So first of all, you need to do two things. You need to first of all identify your SL amount and then the percentage you want to risk, and then you go to your position size calculator, either this, either baby pips. There are many much more. Then you put your account balance, you put the percentage, the stop loss now, which is important, and then you hit calculate. And then what you're interested in is this standard lot area You copy this either to your MT5, Match Trader, C Trader, Trade Locker, or any of them, and then you execute. Limit order, buy stop as the case may be. So we have appropriately managed our risks. So hope you found value from this. Hit the like button. Do well to hit the like button and the subscribe button, and you can check the next video by your side. It will help you understand market trading concept, if just in case you don't have a strategy. Right, guys, thank you very much. Do have a wonderful time.